So we're not going to do the traditional introduction. We just dive right into things because when you were with me last time and we had that conversation with Goldie, and he was talking about how the music industry, artists are not taking care of their business, and we covered that whole topic. By the way, it's doing pretty good.
Getting good numbers?
The numbers? Yeah, it's doing pretty good. I put up a few shorts and then advertising it through the channels such as Instagram and TikTok. Is doing really, really well.
Nice.
But I noticed that we didn't really touch on the tax side of things.
Of course.
Which is, for me, is something I think that's important as an entrepreneur, not only music, because when I was listening to him, it's some of the steps and things that we miss along the way as business people, as entrepreneurs. And I figured what better way to capture this and be able to bring it out to the people that are creators, entrepreneurs. We already covered the aspect of the music, so I'm quite sure people are picking up on that. But there's always been this thing that has been circulating in circles that I'm familiar with, and you're probably familiar with it. People probably have come to you when you've done their taxes, how to pay the simple way to pay zero on your taxes. Is it realistic as an entrepreneur? And there's also been emphasis on taxes. The whole tax code is designed for people who are entrepreneurs. It's not designed for the working class. How much of that is true?
It is very true. You hit on like 3 hot topics I can dive into just from that one question. So taxes are set up in a way that are very beneficial for entrepreneurs and even more beneficial for what really, quote unquote, the wealthy, because what I have found is there's 2 positions, and it doesn't matter, for most of my clients, W-2 or self-employed, when they make about 60 to 65 grand and then they hit that next tax bracket and they go from the 12 to the 22%, like you're kind of stuck. And when you make like $1,000 a week, owing like $2,000 or $3,000 feels like a lifetime of a burden on your shoulders because you've now lost like 2 to 3 weeks of your life. But at that point, unfortunately, with the rules of engagement of like normal, ordinary, and reasonable, what it takes to operate your business, what it takes to live, and how to survive, and just the way that point of the structure is set up at that level, you're kind of stuck and end up owing the money. So a lot of people end up putting it on a payment plan or dealing with it over the next few months because, $2,000 or $3,000 is extremely impactful to someone who only made 60 their whole year.
Right.
The next point where people get really stuck is depending on their scenario. Are they married? Do they have kids? Do they own homes and properties? What are the type of equipment that they have in their business that they're able to depreciate? The next level of stuck is typically between 150 and 300, but narrowing it in, it's really around 250,000. Okay. So it's the same thing. They get stuck, they owe money, and they don't have enough money. You don't have enough resources or money to make the next step where you can actually make a tax move. When you succeed that 300 and you make it 350 or 400 grand, and someone tells you, hey, look, your only move is to run a payroll and to go put some money in a retirement account, buy some equipment, buy a home, do this strategy, whatever it is that the plan is, the available resources to create that plan are not available until you hit that next step.
Right. But so in the beginning of that, prior to getting in that position where you're stuck and you owe these taxes, is there something that can be done to put you in a position where when you file, you don't have to pay that much, such as,
it's tax planning. It's exactly what you're talking about.
Right?
Tax planning.
What about creating like even an LLC to write off some things to where you don't pay as much in the beginning?
So an LLC in the beginning is not a bad idea, but your entity structure that you choose should be something you discuss and plan before you even go out and create it. Unfortunately, the availability of resources and tools to entrepreneurs such as LegalZoom, and I'm not picking on LegalZoom or TurboTax when I use them as examples, they're just the most common ones, right? But when you know that you can go on and for $200 and $300 and go and create an LLC or a corp and it just shows up in your mailbox, and then you went and asked an accountant or a CPA or a lawyer, like what's it going to cost for them to open it, and they tell you it's $1,000 to $5,000, you're like, well, of course I'm going to go with the $300 guy.
Right.
But did the $300 guy give you a plan of why you need that specific entity? Did they teach you why you need to be in this specific state? Did they tell you why you shouldn't be in Delaware or Wyoming or Nevada or all these other places where people go to try to tax shelter? But if you're sheltering without an education of why you're doing it, that's a problem in itself, because what I have found and what our firm has found is most people end up incurring extra fees for tax preparation and to the states locally because they didn't have a plan. And when they didn't know, and exactly what you're talking about, right? Client comes in, hey, I want to open an entity. I want to start my entrepreneurial path. I'm trying to get this going. Well, how do you get that going if I don't know what your end goal is? If I don't know if the goal of this business is to be passed down to your heirs or to your children, or do you have an exit strategy and a plan that you want to sell it in 5, 10, 15, 20 years?
Right.
Hey, you know what? I want to make $5 million and we're gone. Like, that's my goal.
Right.
Each one of those ideals have a different basis of how you should structure it and why.
Right. So,
Great one.
yeah.
How many barbers tell me they want an LLC?
Oh, I can imagine.
Okay.
It's like every barber,
Have you
right?
ever known somebody that got sued for a bad haircut?
No.
So why do you need a limited liability company to protect you from a legal fashion like an LLC as a barber?
Right.
It's probably the worst idea that I hear all the
Right,
time.
right. But see, this is the reason why I'm having this conversation with you. And by the way, thank you for taking the time out. I couldn't think of anybody better that can sit down and be able to explain some of these questions that I may have. And I'm quite sure that people that are going to be watching this get some of their questions answered as well. Than to sit down with you, because you've got how long now, like 10, 15 years in the game?
I grew up in it. Literally, it's in my blood.
It's in your blood.
It's how I've
It's in
always
your
said
blood.
it. It's in my blood. My birthday is April 13th.
Okay.
I was born in the hospital. My mom was holding me like this, and in her hand was a clipboard. She was filling out tax returns, 1983, to put in the mail.
Yeah.
With the clients there to get signed and sent out. My aunt, rest in peace. My aunt had brought in her friend to do her taxes on April 14th.
So this was destined.
This is where it all started. I've been doing taxes since day one.
Right.
I'm 42, but as a professional, and when I was a little kid and I got in trouble, my mom forced me to post checks and do the bookkeeping. So it's literally been happening since day one. People think I'm cocky when I say I learned to read and write on loan documents. But it's literally what happened. You know, my first word was trust deed, grant deed, deed of trust. This is what I did. Yeah. And that led me to opening the Tax Shack. 10 years ago, we've had an actual storefront, and prior to that, we were working out of the house. But 10 years, I feel, is an official business standpoint for us. And we just had our 10-year anniversary for our toy drive. It's been a real fun decade.
Yeah, I saw that. That was pretty cool too. The toy drive, the one you're doing in Vegas, and you opened up another spot in Vegas as well.
Yeah. So we actually had 5 or 6 locations participate with us. We had 3 in California, 3 in Las Vegas. I actually had to go and place Santa's sleigh. I took my truck and drove out there and put all the boxes in, and then we got to go to the Shriners Auditorium. We had like the 6 boxes unloaded, and we got to service thousands of people that day. It was an amazing time participating in that.
Nice. So, getting back to what I was talking about as far as with the LLC. Now, that's a perfect example when you talk about a barber. And you hear this a lot. May it be in the grocery store, the barber shop, casual conversation, get an LLC, write off some of your
you write off all the expenses,
write off
get the car depreciated, go buy this and do that. I mean, look, it's a lot.
And people are doing it because this is the conversation, but they're not really knowing the legalities of it and how deep that goes into. At the end of the day, you may be setting yourself up for failure long term, even though you get something in short term. But I don't know. That's why I'm here. I mean, you tell me, what's the outcome of that? And
it's a good question. So the outcome of when somebody the funny thing is for as easy as it is to open an entity, I would feel like it's almost 3 times as hard to close one.
Right.
Think about what I just said. For as easy as it is to open it, it's probably three times as hard to close it.
Got it.
Okay.
And why is that?
Because let me give you the dream version of this that I see happening. So in the last 5 years, we've had COVID, and COVID was a big help for a lot of things in the world. It brought communities together. It taught us how to reinvent ourselves and do things differently as entrepreneurs.
That was one of the biggest things.
It taught us how to go to the internet. Yeah. It taught us how to do things virtually. It taught us about Zoom. It taught us about all these things, right? That platform also allowed for people to stand up on a soapbox and for them to preach about Unfortunately, bank fraud. Hey, I'm going to teach you how to get an EIN. I'm going to teach you how to get an entity. I'm going to teach you to go to the bank, go get a $150,000 credit card and your credit line. I'm going to teach you how to spend all this money and you don't have to worry about it. Nowhere did they tell them how to operate a business, how it affected them in each individual state where they opened it, how to repay back the money.
Right.
All they did was tell you the first steps to open it and get the money. Like those same people should be standing up going, okay, now it's time to do your taxes. Now it's time to write everything down and do some bookkeeping. Let's see what actually happened in that business. See how it affects you personally. There's a circumstance or a theory in IRS tax law, which is called a hobby loss or a hobby business.
Okay.
Okay. And leading into what you're saying or around the way of what you're getting at, sometimes, not you, Vonn, but some people ask, hey, Dave, can I open this LLC? I want to save money. What they're telling me is I don't want to pay tax, which I have no problem with, okay? But there's 1,000 ways to skin a cat. And if you have that same business and you're let's make up a story for a second, you're a consultant. Consultant's a very broad word. You're not like a lawyer, you're not a realtor, you don't have a professional license. Hey, I'm a consultant, and my consulting business has lost $20,000 a year for the last 5 years. Does that sound like a business?
No.
It sounds like a hobby.
Yeah.
It sounds like me taking a loss on paper to write off all my stuff because I don't want to pay what I earned on my W-2 job. If that person only had that business and only lost $20,000 a year for the next 5 years or last 5 years, how did they eat top ramen? How did they feed themselves?
Yeah.
How did they put gas in the car?
It doesn't add up.
It's not normal, ordinary, or reasonable. Okay?
And
Now, so there's a place for all this. Is it okay and is it not a hobby to have a few-year loss when you're starting up a business? I am sure that Amazon lost money the first couple of years developing the monstrous business they became. Tesla, Google, all these things, right?
Yeah.
At a certain point, your local construction company should start to turn a profit, especially when it has employees and is operational and has. You can't just have millions of dollars of supply in the back and think that you're going to win.
So they give you a 2-year grace period.
It's 2 to 3.
2 or 3 years.
Yeah,
To get your business up and running to be profitable.
There's some normal, ordinary, reasonable rules and guidelines that deal with time. To what declare later when you are getting audited and when you are in trouble for these things. These are the rules that the auditor is going to come back and say, this is a hobby loss because it was over this time. Are there ways around that? Of course there are. Not every business is successful. People that are making a lot of money can open and close and try a lot of things. Things are trendy. Maybe they sold something on eBay. Maybe they tried to do some baseball cards. Maybe they were selling Tupperware or who knows what or some other MLM. But even if they were sales, they were selling different things. They weren't always trying the same company repeatedly.
Got it.
Because it's not in the entrepreneurial spirit to keep digging yourself into a hole.
Right.
I mean, that doesn't... Not every business makes money every year, but that's the goal of what you're trying to do. So if you didn't build wealth and you didn't gain money, in resources, what did you do with it? So maybe you gained a bunch of tools and equipment. Maybe you backed in a bunch of supplies. Maybe you ended up buying a bunch of materials, products, and vehicles that help operate your business. On paper, the business doesn't look profitable.
Right.
But in fact, the business is because you got a whole new fleet of cars, you got a whole bunch of new, heavy machinery, you got a whole bunch of equipment or supplies, and you're building that next thing. Even if it's just wood to build the house. But at least you have something on your balance sheet showing that you have an asset, even if it's not a tangible dollar. How do you have, even if you're a t-shirt company, you got 1 million shirts you can go sell now.
Right. Yeah. So 3 things, then I want to jump into something else. 3 things that you could say that an entrepreneur should do in the beginning prior to filing that first year tax in order to save as much as money that they could possibly save?
Oh, number one, write everything down.
Okay.
Be familiar with where you earn your money and where you spend your money.
Okay.
In the beginning, you don't need to have a bookkeeper, but you do need to have bookkeeping. Right? So if I don't know what I made at the top and I don't know all the categories that I spent my money in, how do I know what I'm left with at the end? And I just had a great conversation about this with a stylist.
Okay.
This young woman got referred to me from another client. she's becoming an entrepreneur. She was always a subcontractor or somebody, and she knows her numbers really well when it comes to in her business, like transaction by transaction. She knows if she charges somebody $1,000, that she had a supply of 500, and she had expenditures along to 150. She knows she made $350 on that 1,000. She knows she's making 35%. But she's not considering all the other tools and things that go into making that one job happen. And that's where you need the bookkeeping, because she's neglecting tracking her mileage on how she had to get there. She's neglecting the phone bill that it took to answer the phone, and the utility of the internet where she lives, to all these things and deductions along the way that are on the broader scope of operating the business, which is where a conversation with your tax professional or your accountant can actually help you understand how these things apply to you personally.
Yeah.
The biggest thing that I hate is when they come in and they go, but I pay $3,000 a month rent. Can I write that off? You get a $1,500 automatic deduction for your home office, or they can do some portioning if you exceed that with some calculations. But in the end of the day, you're not getting that full write-off. And then it gets even worse, to add insult to injury, when that business finally becomes profitable enough. Let's say I do convert them to a corporation. Home office deduction goes away. You can only take that on the Schedule C or as a single member LLC. The minute they become a real business, it's where's the rent for your office? We don't care about your house. Now you got to take payroll. Now your payroll can take a better deduction for your home, but by the time the person goes to realize how much payroll is and how they have to pay payroll tax, a lot of times that's the next hurdle of education. As the business grows, each next step up the ladder has education of compliance and operations that they need to learn. And the best thing is when you have a business owner that either understands and can talk with you, or is completely submissive and trusts you. It just says, Dave, tell me what I got to do and go do it.
Right.
When they ask questions independently, not because of education, but because of resistance or trying to find a workaround, like the way that I used to ask my mom, can I have dessert before dinner? At some point, it's a burnout of the relationship, because I'm not your parent. I am your friend. I am your colleague. I'm trying to help you, but at some point, you're only hurting yourself by not listening to me.
Yeah. So, wow, that's like a head spinner. At the end of the day, I'm thinking about that entrepreneur that's starting a business. They want to focus on growing the business. They want to focus on making the money. But at the end of the day, you do have to take care of the business side of getting your taxes done, paying your taxes. And we all want to save as much money as we can without having to give it to Uncle Sam. But you got to give it up. Two things are certain: death and taxes.
You know who Uncle Sam is, right?
Yeah.
Uncle Sam's that uncle that comes to Thanksgiving with his own doggy bag, ready to leave. He's coming to Christmas going, where's that left?
Right.
Where's the rest of that pie?
Right.
I'm taking it to the car. I'm
Right.
going home.
Yeah.
As much as I hear the woes of people all the time about the Uncle Sam situation, failure to plan is planning for failure.
Yeah.
I think that's what it is, or I said it backwards.
Yeah. Well, I always use the analogy. Somewhere along those lines. So I can't really recall it right now, but I always use the analogy of the 5 Ps. Proper planning prevents poor performance.
Yeah. But the problem that people have, which is actually something that I wrote about in my book, they forget the 10 essentials that go into business.
Yeah.
And the 10 essentials is something I learned when I was in the Boy Scouts. It's, my book's called Be Good or Be Good at It. It's a quick and easy relationship of explaining these tools to an entrepreneur. The idea is the entrepreneur or the business owner is great at doing what they are great at. And you need to then understand who your tools and assets and business partners are that you need to align yourself with, that are like-minded with you, so they can help you do all the other things that you are not an expert at.
Yeah.
Like, hey, guess what? I don't know how to sell on the internet really well, but I do know how to do taxes, right? So let's go figure out the financial planner. Let's go find the marketing guy. Let's go find the videographer.
Right.
Let's go find the person who's going to run your meta ads and all this stuff, because all those business partners that you need to create to make your business work, they're doing what you don't know how to do.
Right, because I find that a lot of times, even me, I'm guilty of it as well, is that sometimes you want to wear all the hats when you don't necessarily need to wear all the hats. Meaning, you want to learn how to do the editing. You want to learn how to do the filming of the content. You want to learn how to structure the LLC. You want to learn how to post, whatever it may be that you're doing along the lines of your business, how to package and how to sell, whatever it may be.
Yeah, we as entrepreneurs should know how to do it, but we shouldn't be the one doing it every time.
Exactly.
Let me try it once. Let me see what it is. Let me get educated. Now I can critique or show you my way or my feeling about it emotionally. I can communicate with you on it.
Right.
I think a lot of that what you're saying as an owner, what I'm hearing you say is I need to know enough to know the language that I can communicate it, but I don't want to be the expert in that field.
Right. I don't want to continue to wear all these hats because it becomes overwhelming, and that's when burnout happens. Yeah. You have to be able to delegate and be able to find people that can put in place that can be able to do it the way that you would do it, or even better. There's a saying that if you're the smartest person in the room, then something's wrong.
Yeah, I want to be the dumbest guy in the room. I want to be around a bunch of smart dudes.
I want to be around a bunch of smart dudes. But the one thing that that I've heard, when I say they, I'm talking about some of the circles that I've been in. I've been around some very successful people and entrepreneurs. It's like almost taboo to talk about that tax guy.
I'll give you one story that I heard.
You never really hear that conversation.
I'm gonna tell you. You want to know how you're around some real wealthy dudes or women, people, entrepreneurs? I was taught this when I was a kid. At the end of the day, no matter how much I want to write off or what I want to get rid of, the answer to a lot of the tax questions is knowing where to put your money properly and how to show that correctly, right? So just the movement of money correctly and categorizing it is going to make Uncle Sam happy and content versus me not putting look, when we had math class, the teacher always said, show all your work. Right? Calculators were around. I'm sure they were for you. I know they were. But
they want to see the steps.
They want to see the steps, your critical thinking. They want to know how you got there, right?
Yeah.
They want to be able to see it the same way as you. A lot of what a tax pro is they're an artist. And we're going to paint the picture for the taxpayer to the IRS in a way that both parties can see the picture properly together.
Makes sense.
Okay, now take that ideology and think about the artist of creating of that artist creating that work and then finally saying to you, you know what, I think I beat this thing down and I can't figure out where to go next. What funds do you have available? What dreams do you have? How can I help you structure some next tax moves or strategies? Because one of the most beautiful and wealthy, amazing statements that I ever got taught when I was a kid was, at the end of the year, when we're sitting around the table and everyone wants to talk about how much they made, none of those guys are wealthy. They're all rich. You want to know who's wealthy?
Who?
Hey, Vonn, how much did you donate this year?
Yeah.
How much did you donate? Because that means at the end of the day, I couldn't write everything off. And guess what? I'm going to go write $1 million check to some nonprofit organization that I believe in, that I entrust in, or a school or something like that. And I want to see my money put to work. You want to put your name on a building. That's a tax write-off in some form or another at some point. That's what the point was. That's where it got to. So I remember as a young man hearing my grandmother's, our family friend, I asked him one time, I think I was maybe 15 or 16. I was naive, I was young. He was the man. Hey, Leo, like, how much did you make last year? I think I donated $2 million to the state of Israel. That was his answer to me. And they named a park after me. And I let that marinate, and then I said, I understand. Because it's not about what you make, it's about how much you keep. And if I can't keep it all, who am I going to affect and let them keep it?
So what I'm hearing is that this is the way that the wealthy keep their wealth.
They open a nonprofit, they're managing it, they're putting the money to work. I mean, there's family management companies. There's all sorts of ways for people to move the money and keep it to work. But each of these ideals have to be individually tailored to that person's tax plan.
Right.
If the person's single with no kids, how am I going to make something for their kids if they're not married?
Right.
If someone's got, an angry stepsister, it's a whole different story of how you're going to organize it,
Yeah. Yeah.
Or if they got two kids that are always fighting, you're going to organize it differently. I'm not saying that I'm a tax attorney, and I'm not saying that I'm talking about living trusts, but just the coordination of how you want the exit strategies or the flow down to happen is part of the strategy.
Yeah. So what about that blue collar worker who's not an entrepreneur and is not doing business as a LLC or a self-owner? How does that blue collar person win? And
Those
don't
are
give up
actually
all their money.
Vonn, those
and pay
are
such the highest tax.
Vonn,
Is it really true that it's not designed for the worker? The tax system is not designed for the worker?
Now you're getting me excited. So some of my favorite clients that I tax plan for are high net worth W-2 earners. People that feel that there's no other way to get rid of the money except for paying the government. I did one earlier this week.
Wait, say that again? That other than paying the government,
they feel there's no other way than to just... They can't keep the money. The government's just going to take it from them. Like, they made the money. They owe this money. W-2's gone. Like, how do they keep the money out?
Okay. Now, yeah.
They make 400 grand.
Yeah.
They made 400 grand or 350
How can
grand.
they keep a large chunk?
They paid 90 grand to the Fed, and they paid 40 grand to the state. They know they added it up. I paid 140 grand to the government. What do I get for that?
Yeah. After a while, that gets to the point to where it's...
Making money is really good, but watching a third of it go away is not very fun.
No, not at all.
So those are some of my favorite people to tax plan for, because when a person is not an entrepreneur and not a creative thinker, and I can go through an assessment with them and an analysis and figure out where their head's at and where they want to do certain things, that's where I can be completely creative. A lot of those ideals are time in the calendar sensitive or regionally sensitive. So I'll give you an example. If I'm working with somebody in the center of America in the Midwest, I might offer them a piece of heavy equipment, something for their farm, or something they can go rent to their neighbor. Go get a tractor for $300,000-$400,000. Let's go do that. Probably not selling that to somebody in Los Angeles. And not many of my friends need a big ass piece of farm equipment.
Right. So it's got to make sense.
Right. It's got to make it's got to make sense.
Yeah.
But will my friend here love to go get an Escalade? I'm sure he'll want a brand new Escalade or a Range Rover and take that deduction.
That's the Cali way.
We want to look flossy. So there's a give and take to that, right? Yeah. On the same note, if it's, December 1st, I can't tell someone reasonably to go get a short-term rental that they're going to close escrow and be able to rent it out before the end of the year and get all the hours and qualifications to take a short-term loophole.
Right.
But guess what? I can explain it to you and educate you on it, and we can plan for the next year. I'm pretty sure that W-2 is not going to go away and get any smaller. So maybe the plan I do in 25 is not as great as the plan I can do in 26, but the connection of those dots and the leading of that trail, the creation of that yellow brick road to guide them to the Emerald City, is what I really enjoy doing, because they would have never thought about it otherwise or seen it otherwise. They would have just maximized their 401k, stuffed the money in the Roth, and did what they got told at work to do, just like they have their whole rest of their life.
Right.
That same W-2 employee is the same one. They messed up their W-4 the first year at the job, because when they got hired and they were all excited, the old adult that was in HR or the manager said, hey, you got 5 minutes to get to work, fill the form out so I can get you going. And they go, I don't know how to fill this W-4 out. Like, what do I put? And they go, just do like me. I'm married with 3 kids, and then just turn it in and get to work. And then all of a sudden the kid owes $800 because they didn't know any better.
Right.
And they did it wrong.
Right. Yeah.
So it's the same path of not listening and not following those directions or getting outside advice that keep the employee stuck in that trap and on that wheel. I want to break that cycle, and I want to teach them how to keep that money and get some of it back and leave with a little something extra. My history from real estate as a young man and as an adult taught me a lot about entrepreneurs and saving money. And one of the things it taught me is when you have peak and valley years, right? Everyone does. It's what you do in those peak years that will determine you in those valleys.
What does that look like for the person who doesn't really know, when you're talking about peak and valleys in business? Peaks is...
Let's use real estate, and let's use 2021 and 2020 as a great example. Everyone remembers when the rates were 3%, sub 4. Let's just call it sub 4. You could have gotten a 2.75 or a 3. I have a real estate license. This is not a real estate conversation. This is a tax conversation.
Right.
When you thought about those time frames and everyone was able to buy a house, that was a great time for an entrepreneur to buy a house, because if they put some money down and they got the house, the interest is really low. They can go and move. They can stay there. They can do whatever. But they had like a dozen, well, I'm exaggerating. They had like 6 to 8 professionals that were all included telling them that the house was worth the money. Right? You had 2 agents. You had the selling agent, the listing agent. You had the bank. You had the appraiser. You had the home inspector. You got an escrow officer. You got all these people with licenses that are telling you the house is worth $500,000. So you put down your 10%, put down your 50 grand, and you got 450 left. And now the tenant's paying that money for you, or you're paying it yourself because you live there. It's the best version of a fixed savings account for an entrepreneur.
Yeah.
Because if all they do is live in it themselves, 30 years from now, they got $500,000. Would you have, as an entrepreneur, Vonn, would you have had $500,000 any other way without buying that house?
No. It's always been said, real estate is a hedge against inflation. It's
So
one of the
even
best
if
vehicles.
even if the equity never moved, the fact that you have to live somewhere and the fact that you got to pay rent or mortgage at any fee, wouldn't you rather pay yourself than somebody else?
Yeah.
So
it's a no-brainer.
So if you do that a couple times, all of a sudden you pick your head up and you look and you got 5 or 10 houses over your 20-year career. Because look, do we all want to buy a house every year? Yeah, great. Is it possible every year? No, because of those peaks and valleys, right? So maybe over 10 years you end up with 5 or 6 houses, and you turn around and go, "Shit, I did okay." That's a great vehicle, or one of the best in our tax code and in our country to be able to be an entrepreneur, save money, and get a write-off.
What about the person who makes under 100,000? What are some of the things? Give me a couple of scenarios, or not even just scenarios, but a couple of things that they could do that would help them to be able to get ahead and not pay as much tax.
If they're an employee,
100,000 as an employee, yes.
As an employee, you have to have your withholdings correct. If you're nervous at all about it, so let me demystify the facts of what happens. When you fill out a W-4, which is the withholding sheet that you turn into your employer so they know how much to take from you every week or 2 weeks when they pay you.
Right.
When an employee gets $1,000, they don't get $1,000, they get like $850. And the boss pays, $1150 or $1250. And they're both mad at each other. I paid too much for you, you didn't give me enough, I want a raise, I don't want to give you the raise. It's a story of business, right? But let's use that $1,000 example. At the end of the whole year, that person, if the W-4 is not correctly set to what their taxes are, they will owe money or they will get a bigger refund. The W-4 is set to correctly match what you file at the end of the year. It's as simple as that. If you're single and you're not married and you're single and you don't have kids, you're friggin' single. You are not head of household. You do not get the extra deduction. Do not count yourself as a 1 on your W-4. You are not a dependent of yourself. So, Vonn, you're filling out the W-4, single 0. I'm filling out the W-4, single 0. If you file married, file married. If you have 2 kids, do not put 2 kids. I'm going to show you a magic trick. Did you know I was a magician, Vonn?
No.
This is my one tax.
Well, I'm coming to find out you are.
This is my one tax magic trick, and I'll share it with you. Ready? So when you're single and you have 0 dependents, you and your spouse,
Right.
you're married, you're bouncing around, single 0. Okay. All of a sudden you bounce like bunnies, and you have a couple kids, and now you're married.
Right.
You go to file your taxes together, and you go to your employer and you tell them I'm married with 2 kids, and she goes to the employer and she says she's married with 2 kids, and you come to Dave to do the taxes at the tax shack, and I go, where's the 4 kids?
Right.
So one of the husband or the wife, whoever's the higher earner, should take the lower dependents. If you're both balanced, it should be 1 and 1. But if one person's making 90 grand and the other one's making 40, the 40 should take the 2 and the 90 should take the 0. That's how you maximize your refund when you make less than 100 grand and you're an employee and you want to get your tax refunds.
Would it be safe to say that they can also do an LLC on top of that? And
The LLC would be if
take
they're
a hobby deduction, or do an LLC on something like
I would start with a handful of things first. So I would tell them to maximize their retirement plans at their job. I would tell them to, take their child to daycare, use the health savings account, the HSA or the FSA at the job. There's all sorts of things you can do internally at the work to change all that. You can even on the W-4 simply just say, I want to pay an additional $25 every week to the government just to be safe because I don't want to owe them any money. I'd rather get the refund back. I don't recommend the free loan, but it is an option. The LLC or idea of opening an entrepreneurial business, a sole proprietor with an EIN or anything like that, go talk to your tax pro. Go have a conversation. Come into the Tax Shack and come see us. Why don't we find out what you're actually excited about, able to do? The idea of I want to be a consultant, like we were talking about.
Right.
Why don't we figure out what you're consulting on? What are you good at? Are you good at administration? Are you good at integrations? Are you good at, something on the computer? There's a lot of, SaaS stuff going on with software as services. What does this person actually want to do to be able to create that extra income and take advantage of all those write-offs?
Right, and I would also say to find out what you're good at and do that and create a business, because right now in today's time, it's no better time that I can speak of and that I know of to be an entrepreneur and to create a business for yourself.
Oh yeah. I was you had my brain twisting a little bit thinking about a good one for the person who's a W-2. Like if I was in that position and I was thinking about what I wanted to do today, I mean, why don't I go be a travel agent? You like traveling. Everyone likes traveling. Sell a couple travel packages. Be a travel agent. You can take advantage of a lot of the write-offs that people want to take advantage of that really will become normal, ordinary, and reasonable for your business that may not be for others. You can't, I cannot legitimately say if I am a local insurance agent in California with a California license, that I have any deductions happening in New York or Philadelphia or Florida. Like, what am I doing there if I have business here?
Right.
But if I'm a travel agent and I'm going to go check out a new spot that I'm going to go sell or create a new relationship for some, like, it seems like a pretty normal, ordinary, and reasonable thing as a travel agent to go traveling.
That's so true, so true. Another thing, going back to the working class and the blue collar and people who are on W-2s, remember we were talking about the maximizing the 401k on the last episode when we were doing it with Goldie. We didn't get a chance to really go into that, but you were saying that what do you know that the boss is going to give you free money?
Yeah, the boss is never going to give you free money.
That was pretty cool, yeah.
The HSA, the FSA, the health savings accounts, and the retirement accounts are the only way to get free money. It's the best deduction. That person who's making $100,000, if they can take 10 grand or 15 or 20,000 and put it into that 401k and save it for later for themselves. Two things happen with it. One, you don't pay tax on it today. So you have all that withholdings that got taken, and now you're showing 80 or 90 grand instead of 100. So you're automatically getting a larger refund because you didn't pay as much. You're still going to get it paid in for your Social Security and Medicare and all this stuff. So you're getting a bunch of credit, which is going to help you. That money that you put in, that 10, 15, 20 grand, is going to get deferred till you're 72 and a half. Later, when you're old and maybe not making as much money, you can always Rothify that and get it out earlier. So you pay a little tax at 70, let's say at 60, you can get the money out because you should have been 59 and a half. But at 60, you may be on the verge of retirement and not making as much anymore. There's all these tricks, tools, and layers and events that can happen taxably. I mean, look, personal story, like my dad got injured when I was a kid. We had to shut his business down, at this point, like almost 20 years ago. And I mean, these are tricks that my dad was doing 20 years ago because he had made a bunch of money prior to that, and he was laid up having neck surgery. So he's not working. So he's going to go Rothify a bunch of money and did a calculation over the next 5 to 10 years. If I do all this, I'm going to have all my money. I don't need to pay much, and I can do what I want with it. So like there's, not every scenario every scenario is created from a happy story. And a lot of times you can take a lot of tax advantages after you had a handful of really good years by the bad year.
Yeah.
And that's why the real estate story of like, I had this pop of a year and I bought some property, and then maybe I had a bunch of average years, and then all of a sudden I had another pop of a year, and then wait a second, I have, COVID happens and no one's buying houses. I'm making a story up, right?
Yeah.
Or you get an illness, you can't work for a year. Guess what? You got a house you can refinance. Refinances are tax-free events. You can get all the money out tax-free, just get the money. You can go and Rothify an account, take some money out, not pay tax. There's all these tricks that you could now do once you have that low year.
Right.
I never pray for somebody to have a low year. I'm just saying there's times to take an advantage taxably by them.
Yeah, but it's just the inevitable. Life happens, and
Yeah.
this is what goes on when you're doing business or if you're working. You know, you work for corporations, they have low years, and things are being shifted and moved around and changed. It's just business. It's just life in general too. You're not going to always have strong numbers and great years and great business. Going to be times when it's lean as well, and being able to capitalize on anything that you can when times are good and when times are lean, peaks and valleys again, like you were speaking of. It's important, and I think that a lot of it starts from the way that things are structured, the foundation of your business, the foundation of your finances, and that's one of the reasons why I wanted to have this conversation.
Yeah, one of the
structuring your finances and structuring your foundation properly is important.
The term LLC, when you talk about structure, gets utilized in the word when it should be used as an entity, because it's just easier and it's simplified. But the structure of what your business is in, either a C corp, an S corp, or an LLC, each one have amazing advantages. For simple version, the LLC and the C corp could both become an S corp. They both could be transitioned or transferred into that formation, and you can actually transfer them out later if you needed to for tax purposes. But there's give and take to why each one is there positively and how they can affect the person.
Right.
So each one has a local or state advantage or disadvantage. Each one has IRS, federal advantages, disadvantages, and there's a purpose behind each one. One of my colleagues is doing, trying to do more evaluations and exit strategies and teaching the businesses like, hey, if we do this over the next 5 or 10 years, we could sell your business for this amount of money. And he's doing, stuff, exit strategies like that. And so the structure of how he takes in the business or how he transfers it for what the exit strategy is of utmost importance, because when you sell the shares to those companies, they get taxed differently. So a C corp, you may get taxed, if you're less than 5 or 10 mil, you may get to keep a lot of that money. When you're an S or an S corp or an LLC, you may get taxed very heavily.
Right. Right.
These are things that people really don't consider when they open it up, because they go, I just want to have my company. I want an LLC. Well, do you really want an LLC? Because back to the barber, what are you worried about? If I have a rental property in a nefarious neighborhood and I'm worried about the tenant slipping on some water so they can have an insurance claim against me, I might want to have an LLC.
Yeah.
You know what I mean? Because the guy got bit by the dog or whatever. But I don't know hairdressers and barbers that really have a problem. So there's some lessons of learning that I would like to impress upon people before they go and do this. And that's a big one.
Yeah. I like that book that you put out too, because a lot of times when people do these ebooks, or they have a book that they're actually selling or you can download, and you present it for free, correct?
Yeah, absolutely.
But it's so simple though. It's really, really simple, and it piqued my interest, and I would love for you to be able to, I know we'll drop it in a link, but also right now, just tell people where they can go to get that book, because it's just really a short read. It's less than what?
It's
20 minutes?
less than 20 pages. It takes you more than 15 minutes.
Yeah.
It's a lot of pictures of me in there with a lot of, artistic graphics.
But that's what's cool too, the illustrations, because it guides you and leads you to the point to where, okay, it gives you something to think about. Okay, this is what I need to be doing. This is what I need to structure.
Yeah, the greatest thing about the book, so it's www.mytaxshack.com/ebook. There's like no hyphen in the ebook, just EBOOK.
Right.
The book really describes to people the 10 essentials that I had learned when I was in Boy Scouts to go camping with and go outdoors with, water, sunscreen, rain gear, pocket knife, things like that. Yeah. And it totally coordinates it to business tools that you need as an entrepreneur. These are the things that I have said on repeat over the last 10 years to people, and not all of them are about me or Tax Shack. It's like, hey, let's get you some insurance. You need to cover yourself. What happens on those days? Let's get you a financial advisor, because it's not about what you make, it's about what you keep, and that's not my job, but I can show you the right guy. There's, what entity structure do you have? how do you start taking the correct deductions? When is the right time to switch from a sole proprietor to a corporation or an S Corp or an LLC? What is a home office deduction? What is the alternative? I alluded to it earlier, but people know about the Masters in Augusta. You watch golf? You know what
Not too much.
The gold jacket, you know what we're talking about.
Yeah, I know all about it though. Yeah.
The Masters is in Augusta, and there is a tax rule that was based upon that called the Augusta rule. We talk about it in the book. The Augusta rule is
I remember that now. It's coming back.
It's made because people rent their houses out and they don't want to pay the taxes on it. So people come into Augusta, they go to the Masters, they rent the house out for 10 to 14 days. It's a tax-free event. We've now taken that rule for corporations, and you can use your own home to hold a board of directors meeting or an event for your team, or rent your home out to yourself. As long as you have all the paperwork, documentation, and transfers of funds, you can take advantage of these tax advantages that are rightfully there for everyone to do right in front of us. The problem is people hear about the Augusta rule and they walk into my office and they go, I rented my house to myself for 14 days. Let's write it up.
It ain't that easy.
Did you do the bookkeeping? Did you write the contracts?
Right.
Did you transfer the money last year correctly?
Yeah.
Like when you did it?
Yeah.
Did you do all the, because if you didn't do the homework, I can show you how to do it, but there's accuracy and due diligence that needs to happen before you can take these deductions and credits accurately. You want to, can you take it, Vonn? Sure you can. Will I be able to protect you with it later? That's the real question.
Yeah,
and that's why we want to set them up for success.
Question. Yeah.
A lot of what is the audit risk of, me inflating this one line or me putting this thing here? Do I really think that you have a huge audit risk on one tax return at a time? Not really, but the problem is that one person who gets away with one thing once, wants to continue do it. And when you get in front of the auditor and they go and they look back at your last 5 or 10 years of taxes, you're going to start eating all that shit back up.
Yeah.
It's like when you get in trouble and they go and run your fingerprints and then they see all the other crimes you
crazy.
did.
You just took. I was just getting ready to say that. You hit it when I said, you hit it right on the head. It's so true, man. It's like you have to understand that there's a ledger, there's a log, there's a blueprint for everything that's being done. And when that picture is looked at, you want that picture to be one that's looked at that's just clear and clean and visible as possible. You don't want the mud, you don't want anything in there that's going to blur it or take it out of focus, because that's where you begin to win. And it dives back in for me to an old saying that's an ounce of prevention is worth a pound of cure. These are some of the things that, as a business person, you want to get in, you want to make money, whatever that you're doing. But in order to be able to keep that money and sustain yourself and have that longevity, ounce of prevention for that pound of cure. Structure the business right. I can't stress that enough. Am I correct?
You're hitting the nail on the head. It really is. The foundation that you build for yourself is going to make that business or your home last the lifetime that it's worth.
Yeah.
And if we're building shacks like we're on the Caribbean, a tropical storm will come through and wipe it out. If we're building some concrete structures that'll withstand some bombs, I think that's the way to do it,
Yeah. So at the end of the day, I started this by saying the simplest way to pay no taxes. There's no such thing as paying zero taxes, correct?
There is. But you have to pay zero tax by listening to your tax advisor, tax pro, CPA, enrolled agent, whatever it is. And you have to actually move the money the way they're telling you and document and do everything properly. So I think the real answer is can I pay zero? Yeah. Can I pay zero without making money moves and keeping the money and paying some taxes somewhere and credit for myself?
Yeah.
I think that's the part that people really don't understand or get.
Right.
Like, you got to run payroll. Payroll's the admission ticket to everything. Look, let's go back to Sesame Street. Payroll starts with a P. Payroll is personal. If you want to take a vacation and you're the business owner, draw payroll. There's no one that says you can't take that as a deduction of your business, but why does it need to be on travel, meals, and entertainment instead of just being a blank payroll line that people don't ever think about?
Yeah.
And then the payroll is your admission ticket to your retirement accounts and everything else you're doing. So I think there's some keys where people, I don't think it's right that a person thinks that they can be exempt completely from all tax. How do you exempt yourself from all tax, not save any money, write everything off, and expect reasonably to get disability, unemployment, government assistance, or anything else if you never paid into it? So I feel like a little bit is participation for value, right? And I think a little bit of it is getting what you want because you're the business owner.
Right.
So can I drive a different vehicle if I'm the business owner and I can write it off? Sure, you can go get a brand new truck instead of driving the old beat up jalopy. You know, can you go buy a new computer and write it off? Sure. But and will those things be tax deductible or even the depreciation? Sure. But how do you get them to pay? How do you use all that and tell me you're going to pay nothing and then have nothing when it's done? You have to have something saved when it's over with. And it's not about, that's why I keep saying it's not about what you make, it's about what you keep. The money's either, you got to have something left around somewhere to show for it. I mean, dude, go bury some bars of gold in the backyard. I don't care what you do, but like.
Have something to show for it.
Yeah.
Exactly. Yeah. Is that rule still in effect? I know it was really good a couple of years ago. Buying a vehicle, do you buy it? Do you lease it? Over 6,000 pounds. How do you win with that scenario?
So thankfully, our president just brought back a whole bunch of new rules for entrepreneurs, including what you're talking about, which is full depreciation, Section 179, and bonus depreciation for business owners and entrepreneurs. It's directly related to heavy machinery, vehicles, equipment, things of that nature. Yes, buy it, unless...
Or don't lease it, buy it.
Oh, yeah, if you want that deduction that you're talking about.
For a car that has over 6,000 pounds.
If you want that deduction, you have to buy it. You cannot lease it and get both.
Okay.
Okay? So if you lease it, you don't own it, you cannot depreciate it because it's not yours when it's over.
Right. But is there some type of tax deduction that you can get when you lease a car that's over 6,000 pounds?
It's the same rules apply on leases. It doesn't matter the weight. So if I lease let me explain to you what people do. They lease their sports car that they cannot depreciate, right? Because they're taking the large payment on the sports car, and then they depreciate the heavy truck.
Okay.
So you want an Aston Martin, you want to go get a Tesla, you want to go get a friggin' Porsche, you want to get a whatever it is, you can go write off all that fancy stuff as a regular vehicle on the lease. Go get your F-150 truck, your Raptor, your TRX, your Escalade, your SUV. Go buy that.
Buy it.
Yeah, because that's how you get to capture that deduction.
But does that really make sense though? Because the way that vehicles depreciate, there's really no value in a vehicle.
I'll give you the math. You ready for the math?
Yeah.
It's a $100,000 purchase for a $30,000 deduction, taxably.
Okay.
Okay. But you're not putting down 30 grand or the 100 when you bought it. You're probably putting down 25 grand or 20 grand to buy the thing, and you're taking payments.
Okay.
So what's more valuable, the 30 grand on your taxes that you don't get paid today, or the fancy car that you got to ride around with for less than 30 grand?
Okay.
So the maths, it doesn't math if you're doing, the maths if you do it once every couple years. The math does not math when you end up with a parking lot full of cars. If your driveway has 5 different cars because you've taken the deduction 5 years in a row, I would hope that you are a construction company that has a fleet of 20 vehicles, and every year you're cycling the old one out. That strategy is not for a realtor who just drives to homes every day with his clients.
But you can only do that when it's a new purchase, and you can only do it for one time a year. That year for that vehicle, you can only write that car off that one time.
You get the deduction.
Do you do it multiple times after that?
You get a choice. This is a great conversation where you get a choice. So if it's over 6,000 pounds, you get the choice. If it's less than 6,000 pounds, you only get one of the choices. Okay?
Okay.
So let's use the same option with 2 cars. Let's use a $100,000 sedan, and let's use a $100,000 over 6,000 pound SUV. Math is still mathing. You can take the car or the truck divided by 5, $20,000 a year. You could take the truck one time, 100 grand, or divided by 5, 20 times. It's the same deduction. It's how you get to use it and leverage it. This is another reason why you need tax strategy and tax planning, because the way that would affect you over time is going to be a different choice for each taxpayer. I wouldn't want someone who's making a one-time peak to go make a 5-year decision.
Yeah.
So if the business is consistent, do I need it once or should I take it over 5 years?
See, this is why I'm having this conversation.
It's really like
it's really deep. It's deep in the sense of how much you can actually save and how much it's for you, and how you really, really can win in this tax game.
Yeah.
It's really, really deep. You can. What I'm gathering is you could do one or two things. You can do your homework. You can be self-taught. You can learn these things with all the information that's out there. You can ask AI, which I don't really.
There's a lot
of take that route, because that's not always right.
Yeah, if you're going to use AI tools, you have to pay for expensive ones that are closed loop. The open loop AI tools. I'll give you an example. Like, here's a big word that people go to look up tax rules on. Oh, look, did you hear that there's going to fund a new, bigger refund for child credit? Oh, is it proposed or is it approved? And all of a sudden you Google it or you look it up.
That's a big difference.
And it's all the proposals that they're doing.
Or is it approved? Right.
And so they got me spinning in circles looking up information on something that was a news highlight for 1 minute of a proposal and not an actual approved bill. But in the fact of, and this even came up like in July and August when they did approve the one new bigger, better bill, I would go to do research to answer a question for a client on, tax compliance or on, gambling earnings. And I would have to really make sure that I was looking on the approved bill and not on the proposals, because some of the numbers changed.
Yeah.
So even if I'm an expert, and I've been an expert for my whole life, it doesn't matter, because the rules constantly change to the game. How do you play a game when the rules constantly change?
Yeah, and so that's you having to continuously.
Can you imagine, we were talking about Vegas before we started, could you imagine being in the middle of blackjack or in the middle of the craps, and all of a sudden the pit boss goes, we're playing to 22 now, guys, don't worry, not 21.
You're looking around like, what just happened, right?
Like, middle of the game,
right.
We're just going to switch it up.
Yeah, that's crazy. So somebody's looking to hire you, and they do hire you, and because they know that this is the route they need to take to win. Do they continuously ask you questions along the way to the tax year, or can they rely on you to take care of things for them over the course of the year, or do they need to speak to you quarterly? Do you guys need to reconvene? What needs to happen in order for them to be able to be to the point to where at the end of the day, they're at zero tax that they paid?
Vonn, the greatest thing to that question is, number one, it's not just me. I have a full team. Okay. So my team works on everything for everybody. We are familiar with all the clients. Obviously, there's clients that want to seek me out or seek a team member of my team out, Brian, Laura, Eileen, Jasmine. They want to deal with whoever they've been associated with that they like. But if that person's out of the office, they're on vacation, they're sick that day, they're busy, we all help and contribute to work on every one. So no one has felt left behind or left out. Directing that question directly to one tax person, though, each scenario is different, like we've said. So our tax services at our firm can start as, basic tax return is a couple $100, and it goes up from there, person with one W-2. We have clients that we service that pay us, a tax plan is implementation. A tax plan for us to create a strategy is about $2,500. A tax implementation for an advisory service is about $10,000 to $30,000 on average, but we have some that are more and we have some that are less. Those are for people that want a full planning, bookkeeping, and it's a full top tier package. So when
they basically would just give it to you. It just you just run everything for them.
With that person, we have bi-weekly meetings with them. We have weekly meetings. We have monthly meetings. We have full. It depends on what the client's services and needs are. But on average, a tax planning account that we have, one of our advisory clients, is met with no less than quarterly, and on average, monthly or bi-monthly, to check in on what's going on, making sure the plan's going, making sure the revenue and the plan that we created is aligned. Because one of the beauties of tax planning is, it's not done yet. You know, Vonn, one of the things that I learned very early on when I was a kid, I would be 20 years old and I would be a notary, and I'm going to do a notary job for somebody for real estate. And I'd go to the escrow office and they would go, and I would tell them, hey, I need a copy package. You didn't give me a copy package. And they go, you know, you're a newbie. You don't know this. And I go, no, I've been doing this 20 years. I was born in this. Like, I know what I'm doing. The same thing applies when it looks at a CPA, an enrolled agent, or any tax professional. When you see them in April, they're just doing data entry and they're a historian. The same person you're getting an H&R Block, Jackson Hewitt, or Liberty Tax is the same quality of tax filing you're going to get pretty much anywhere, because there's no movement I can do in April of 26 for 2025.
Right.
That's why tax planning is so awesome, is because it's current, it's proactive, and it changes as you go when we're in the year. I could have been telling someone to buy a vehicle all year long, or the first half of the year I could have told them not to buy a vehicle. Bigger, better bill comes back out, they changed it up. Now all I'm doing is advocating buying a vehicle. Just because the rules changed in the way that we were doing it. Up until now in 2024, that deduction was almost cut in half. You were only able to take about 60%. Now they're taking 100. That's why it's such a big deal. So, you know, and then you get the 10% a year for the next 4 years afterwards. So it was there, but it wasn't advantageous at all. Now it's totally changed and the limits are changed, and you can do that. But where I'm going with this is that as the tax plan changes over the year, it changes with what the business is doing. Are they making more money? Are they making less money? That's the best way to get the actual bill to the IRS to zero. Is if I can watch it as it's going. We can figure out how to move the money. We can pay the wife. We can pay the children. We can have a board of directors meetings. We can have, you know, an accountability plan. We can do strategy. I can't do, the Augusta rule. I can't do any of that in April. April is unfortunately, as busy as it is, it's a very boring time because I'm just doing data entry. I'm saying hello to people, asking how their kids are. It's fun that I get to see all my friends and family, but it's not an engaging, mind-driven time. May through December is when it gets really fun, because now I'm planning, now we're discussing, now we're doing proactive things.
For the people that are in California, mainly here in LA and in the surrounding areas, that may listen to this and want to use your services, I can see that being a convenience for them. But for the people that are not here in California that are seeing this, because this is worldwide.
Oh yeah, well, we're a nationwide company, so that's no problem.
Nationwide, right? Okay.
Yeah, we have an office in Las Vegas. We have an office here in California, in Encino. We have a couple remote offices in Santa Monica and in San Diego also. We are certified to work on all 50 states. No problem. So if someone wants to see us, we can do a Teams meeting. We can do a virtual meeting. We can do everything through our secured Carbon link portal, where they can upload everything securely to us and go back and forth. E-document signatures. We're, post-COVID, we've had to become a full virtual firm. So it's not a problem for us.
Right. I think that's pretty cool that you guys are working as a team and you have a lot of people that can help, because at the end of the day, when you're structuring a business, a person who's just starting, may you know how to structure a business, may you know nothing about a business, but you have a desire and a passion for structuring your business right. You want to be able to feel at ease, and I'm speaking from experience.
Oh yeah.
You want to feel at ease knowing that somebody's got your back and is helping you along the way and has your better interests at heart while you're structuring this. And this is really important stuff here.
Yeah.
And for you to have that in place, I think that would be something that would be very useful for someone starting out, and even for someone who's in business right now and they need to really buckle down and get things structured so that the business can grow the right way and continue to have the four legs that they need to be strong.
Vonn, I couldn't have said it better. I feel that on that note, just to add to it, reassurance is something that everyone needs. Yeah. If your tax pro's not available to you after April, if they're not answering your phone, email, or messages, it's a perfect reason to go switch and find a new one who's proactive to plan with you. Yeah. One of the mythologies of accounting is that these people just shut their doors. And it's a fact. Like, you will find businesses that are only open January to April. They're maybe there once a week or once a month after that, checking the mail, and like they don't even help their clients deal with notices that they get.
Yeah.
We're here all year round. My team all leaves their cell phones available to clients. I can pretty much say if we're awake, we're answering the phone and helping somebody do something, which is what we're very proud to do, is be proactive with them. Additionally, you know, if it's something we can't answer in a 1-minute phone call, that's why we have these planning meetings and these, you know, in person and teams and ways of helping somebody figure something out. One of the lessons that I've taught my team is very clearly, you don't need to have the answer to everything, but you have to know where to get it. You have to have the resources and the guides and be able to tell them, I will find this out. That's the key that we've provided to our team and to our client base. Yeah. You have to be able to find the answer to be able to help them out, and that's the key to success.
You know, this is good, man. I'm glad we got a chance to really cover this because it's crazy how you want to do business, you want to be successful, but you don't want to pay taxes. You know, it's I think that's just an innate thing with everybody. It's like, God, I don't want to give my money up. I just don't want to give it up, but.
You know, my man Rick Rock said it best when I did the podcast with him. Yeah. He said, I did not know until I filed my taxes that I had a silent partner.
Yeah, yeah.
And they want 38%.
That's good. Looking at it that way, silent partner, because they're not going away.
You have them forever.
Yeah.
So like, you know, that's part of the, you know, part of it is give the silent partner what their due justice is and what they earned. Because we were here contributing in the society of what we got out of it, you know?
Right.
But I on that part of it, sidebar, okay, I cannot fully agree when everyone says like about gas tax and sales tax and property tax. Like, there are follow-ups to all these things that I you know, the amounts in some of these cities is outrageous. I mean, like, I don't know, but city sales tax in Lancaster is like 11.75%.
Yeah, it's crazy. That's
like, there's a lot of like weird things like that are like, you know, maybe slightly unreasonable for certain ideologies, but the general idea of taxes, pay to play. Yeah. And you know, property tax is there for a certain reason. You know, we can argue about a gas tax and sales tax, but right. Payroll tax, state tax, IRS, these things are they came about. Do you know why all these things came about?
No, tell me about it.
Wisdom Wednesdays. You should watch Wisdom Wednesdays with my guy Brian.
Okay.
So Brian does his whole breakdown on Wednesday.
So Wisdom Wednesdays, that's something you guys post on?
That's on our Instagram. Yeah.
That's on Instagram.
Yeah. So on our Instagram, Tax Shack, we have our days are laid out by calendar. So I do Motivation Monday. Laura does Tax Tip Tuesdays. Wednesday is Wisdom Wednesday with Brian. We Cash Flow Friday with our bookkeeping department, just dropping gems. You know, 1-minute gems of keeping people knowledgeable and activated. And
what's the Instagram handle?
At Tax Shack. TAXSHACK.
We'll put the link in, but I always like to be able to reiterate it over the course of talking about it.
So you know, Brian talks about, you know, when we were in war and they created a tax, and then why they started doing taxes on wages early on and prepayments, because they needed money to pay for certain items and things. And then later, this idea of vehicle depreciation that you're talking about, you know why that came in?
No, tell me about it.
We have this president in the 90s. His name was George Bush. Where was Bush from?
Right.
They're from Texas,
right? Yeah.
What's in Texas?
Everything's
oil fields.
Oil fields.
Gasoline.
Yeah.
So what takes oil and gas?
Vehicles.
Big Chevy Cadillacs, Escalades that need to get ridden off. Vehicles over 6,000 pounds.
Makes sense. Yeah.
So in the end of the day, who do you think benefited from making everyone buy heavy equipment vehicles? Right. People in Texas that were invested in oil and gas. Yeah. It's all cyclical. I'm not saying that it's like purposely nefarious, you know, a bad thing, but if you look at where things stem from, they make a lot more sense. So I understand why these deductions on these high vehicles aren't going away, because we had a president that was in Texas that was dealing, you know, in the oil fields and had an oil business, and look at where we got this rule from. I mean, it makes sense.
Right. It's a lot of information we cover today. For so many people, they, like I say, they run from it. You know, in circles that I visit, even outside the circles, you just hear people laughing and they're talking about it and making jokes of it and light of it, but they're really serious. They really don't want to pay a tax, but they don't want to do the homework and figure out how to win without paying a tax.
But do the people that don't want to pay tax, I'm going to ask you this one. Think about this when you think about that person. Are they a giver or are they a taker?
Well,
because, and I'm not saying that as a dig at that person.
Right.
If you think about that person in general, if they're a giver or if they're a taker, that same person that's saying they don't want to pay the government is probably the same person that's seeking or is on a benefit from the government.
Right. Well, let me reiterate that. Not to say that they don't want to pay tax. They don't want to. They're not doing the homework and seeking the proper channels.
I want to have people
to pay less.
I want to have people pay
as possible,
the least amount possible and accurately what they're supposed to.
Yes, yeah, and that's why I'm here with you now, because that was. It's funny how when we did that segment, I went to like it was like a mixer, and I really didn't know these people. We're just having a conversation. You know, you meet somebody. Hey, I'm Vonn, I'm Dave, and well, what do you do? And you start talking, and then you start talking about business, and it just leads into other things. And I found that a lot of the conversation at that mixer was leading into taxes. How do you save on taxes? We're not saving on taxes. Some of the places you can go to. And then we end up shooting the episode with Goldie. And we was talking about the music part of it. And it's just crazy how things just fell in line. And here we are, based on those conversations we had that led up to that footage and now to lead to where we are now talking about this. You know, so it's a big thing, man. And I think we can all win from it, you know.
It's, you know,
but when you do it right, and you have the right advisor, you align yourself with the right people.
Yeah, I mean, sporting events are another fun one to talk about. But you're right. Like, people always talk about, when you talk about the music, people always want to go, how do I write off the sporting tickets? How do I write off this? How do I write off? Like I said, sometimes being involved in it is the best way. Like we were saying with the tourist idea. Yeah. You know, having that conversation is the key. Talking to those people, hearing what they're saying and dissecting through it at that mixer, that will, you know, if you take a little piece from everyone and put it together, you might get a good plan. But I wouldn't listen to one person on one thing all the way through. Yeah, yeah. I wouldn't tell somebody to go to a mixer and listen and put pieces together and try and structure your company or try and figure out how to get loopholes for taxes. I think it's a good conversation to go and have with your accountant. I heard this. Can you educate me on it? Yeah. I think that the sentence comes out wrong when people go, I read this or I know this. Hey, I've heard this. Can you educate me on it? How does it apply to me directly? I think that's the best question any person can ever ask their accountant. Yeah, yeah. Dave, I appreciate your time, man. I know you're working, man. Hey, Vonn, I figured I'd come through here. Keep it moving, baby. That's right, baby. Keep it moving. I figured I'd come through here and, you know, get a little bit of wisdom and some information. Thank you for coming by the Tax Shack. Yeah, man. Enjoying the view, having a good time with us. I appreciate you too, man. Well, anything else you want to add, Vonn? Anything you want from me? Yeah, man. Tell people where they can find you. Check us out, www.mytaxshack.com, @TaxShack on Instagram, TikTok, TaxShack1040 on YouTube, and the Deduction Daddy podcast on Apple Music and on Spotify. And of course, you know, I'm going to definitely put you in all the links and all the posts that I do. And it's going to be all over my feed. So this is good. And let's just hope that the people can. Anything that we can do to get anyone to pay less tax and keep more money is what we are about, man. The slogan at the Tax Shack is friends don't let friends do their own taxes. There we go. That's our motto, and that's what we're going to end it on. Friends don't let friends do their own taxes. Where the money at, dog? We'll bring it back. The world where the money at, right there. Tap in with Tax Shack. What where your money at?